sponsored by the Securities and Exchange Commission of Nigeria.
Hello and welcome back to Project 50. It's the Securities and Exchange Commission's event here in Abuja, Nigeria. It's the Regulators Forum talking about what's needed for better cooperation amongst regulators. Before the break, we were talking about various mechanisms to get people invested in their capital markets. Collective investment schemes is something that Arunma Oteh mentioned. Norman Muller, let's get your view from South Africa. Earlier on, we were trying to find out about what you need to do to keep investors in the market. Taxes, maybe you can answer that question, but also just tell us about how investment schemes, the provident funds, those kinds of things work in a market like South Africa, where at least you can trust your pension, the value of your pension to grow for you through a stock exchange.
I think the challenge is, and we work very closely with the market, is to employ the best available systems at the lowest cost.
Yeah.
Our stock exchange is currently busy replacing trading systems, trading, clearing and settlement systems to be really competitive with the rest of the world. And that is a great challenge, a continuous process to employ the best available systems in South Africa. In terms of pension funds, provident funds, that is a separate division department within the Financial Services Board and being regulated in terms of the Pension Funds Act 56. We have very stringent rules and regulations in terms of various pension funds, private pension funds. I think currently we have over 16,000 pension funds in South Africa. I personally is not directly involved in that department, but that department is very much involved in the daily operation and regulation of pension funds in South Africa.
I mean, I know that you're just the regulator, and particularly not with the pension funds, but there have been questions post-crisis and recession, even in South Africa, as to whether or not pensions are yielding results, whether or not you should just be looking straight at equities, for instance, or even just investing in property. Is this the way to go?
With the instruments that investors and especially institutions may invest, that regulation is recently totally revised. And to take in consideration various risk of instruments, we had the experience in South Africa that certain pension funds even invested in the past in commodity derivatives that created a lot of risk for investors. So that whole dispensation regulation 28 has been revised to reduce the systemic risk for the investors.
Stella Kilonzo, let's get a view from you, because obviously we are seeing, with the consolidation of the East African community, the amalgam of those stock exchanges as well. Not everybody is playing ball, to simplify the text. You know, it seems as though Uganda, Rwanda, Kenya are walking in tandem towards a common vision of a united exchange. And then you have a market like Tanzania that's still so insular, protected. It doesn't really want even members of the EAC investing in Tanzanian assets. So you've got that kind of mentality on the one side, and then a mentality that's more open and liberal on the other side. What does that mean for cooperation in East Africa?
I will say there's still a lot of cooperation going on. We actually, under the ambit of the East African Capital Markets, Pension and Insurance Regulators, we meet often with the stock exchanges, again, to just propel the market. Currently, the work that's going on the regionalization front is really to ensure that the systems are talking to each other, and that has successfully been undertaken because most of the countries, all the countries, including Tanzania, have bought the same system for trading. So that will pave the way for trading and settlement within the East African region. A lot of our companies are cross-listing, and what we see for the first time, actually, there's an IPO going on, and it has actually been opened up by Tanzania to the rest of East Africans. So that's a great win. What I would want to say is that there is a time schedule in terms of what some of the countries were going to do, and that was clearly understood. But the process of the common monetary union is something that is actually at an advanced stage. But I guess the question is, what sort of model will be adopted? Will it be one common currency, as we saw in the euro, or would we have parallel currencies? And those discussions are going on currently. What I would wish to say is really the regionalization from the business perspective is currently ongoing, and I think the discussions are now at the higher level of the sovereignty of the various countries. The other area which I would want to talk about is liquidity. We have seen that when you look at the East African market, you're talking about a population of 133 million, 75 billion in terms of GDP. And obviously that's a bigger sale, that's a bigger market, and that's what the focus is on right now. It's okay to talk about the various countries, but the big issue is how do we get all the East Africans to really together. And we've seen concerted effort both from the country perspective as well as the international perspective. The other area I would just wish to mention is about fund managers. I think that was a question you had raised before we went on break. We did actually from a country level promote the Fund Managers Association, and we do meet with them often in terms of what are the policy initiatives. I think a lot is being done currently on having a real estate investment trust that will ensure that the products are diversified so that they're not just necessarily investing in equities or bonds. The other area has obviously been the success of the infrastructure bonds because of the incentives again provided by the government. Very low taxes for the issuers as well as even the investors who do invest in them. The other area has really been on the success of the Islamic products. I think we've just set off a series of meetings from about October the 19th with the Islamic community on bringing on board Islamic products. We did license an Islamic investment bank, and it has issued the first unit trust under the collective investment scheme. So we do see diversity, and that's what we need. We need to provide investors with choice as well as issuers with choice.
Sticking with the theme of liquidity, one of the biggest problems that Kenya has faced is the market is driven largely by foreign investors. And when we've seen foreigners holding back, that market has sunk significantly, as I said earlier on. So there is a need to get locals active in the market. This is where local pension funds come to the fore and other collective investment schemes. And I know that banks like Equity Bank are doing a great deal of work in trying to get cooperatives coming to the market, but it's not working in terms of creating momentum and dynamism.
What I would say is that obviously the issues to do with the currency are the ones that really affected the foreigners because maybe they needed to have some certainty. But we have seen about 2 million right now of investors, at least recently, were in equities. What I would wish to say is that some of these strategies are really in the medium term, because you have to, even when we look at the Brazil example, it took about 10 years for them to really develop into where they are now in terms of their capital markets. So I would wish to say that for this particular product, it's very critical that we at least address the issues in terms of building the domestic investor base. I think there are even discussions currently ongoing with the pension trustees in terms of how do we look at the South African example as well as the Nigerian example of looking at how does the private equity actually access those funds. And those discussions, we had a big conference this year, and those discussions are ongoing, as well as trying to see what are these limits we have on the pension. Right. So there's a lot going on from that perspective.
Governor Sanusi, the structural elements of the Nigerian economy, much talked about, much documented, you've said a lot about it, but the issue is, as the economy grows, and you're expecting it to grow exponentially over the next few years, you need to get a sense that Nigeria as an economy has a lot more to offer. And it's encouraging that recent growth figures show that agriculture, for instance, is driving that growth. But you just need a situation where the economy is reviewed, restructured, diversified, and that you just create a broader pool of revenue growth in this economy. You've said a lot in this regard about what government needs to do. And government says we're doing everything. We're investing in infrastructure. We're doing everything we can. The new minister wants to curb the deficit and overspending and those sorts of things. But when are we likely to see those changes? Earlier on, they spoke about deregulation. That's one avenue in which the government could get savings. And what would they do with those savings?
Well, a major thing, obviously, is that structural and fiscal consolidation and change take a longer period than monetary intervention. So it's always easy for us as a central bank to, in the short term, absorb some of the problems, but in the medium term, these structural changes need to fit in. Now, the principal problem with Nigeria have always said is a simple value chain problem. We are an oil exporting country that imports petroleum products. Okay, we are the world's #1 producer of cassava. We don't produce any starch. We have a tomato belt. We don't produce tomato paste. We have a cotton belt, and we import fabric from China. The Minister of Trade and Investment has recognized that. The real challenge is how do you, move from being a primary producer into the secondary and tertiary markets. Now we've got a tertiary market, you've got MTN, you've got services, but those are not employment intensive. What you need to do is basically get back to how do you build your petrochemicals? How do you stop importing refined petroleum products? How do you provide your own power? And then how do you build those processing plants? We're not talking about building aircraft manufacturers. We're talking about textiles, talking about starch, you're talking about tomato paste, you're talking about rice processing, and basically reduce your dependence on these things that you could easily produce and create jobs. Now, my sense is if the economy is growing at 7% without all of these things being fixed, we can grow easily in double digit. The second issue is that the Nigerian economy is actually more diversified than people say. 42% of GDP is agriculture. Oil is only 13%. People think oil is the mainstay. It's not. Now, the problem is because the oil sector provides 80% of government revenues and 98% of exports. Oil plays a disproportionate role in government finances and the financial system than it should. And what we need is to get those other areas into areas where they're contributing more to government revenue and reduce that risk and that dependence.
Okay, Arunma Oteh, we run out of time. Just a final word from you as we celebrate 50 years of capital markets regulation in Nigeria. What does the future hold, the next 50 years?
The next 50 years abounds with investment opportunity across several sectors. We do believe that the capital markets is the channel for those investment opportunities to be realized and for investors to realize their objectives. But we do recognize that that will only happen if investors feel that their assets are safe. Okay. And we, as a regulator, the Securities and Exchange Commission, commit to making sure that investors feel that their assets are safe. Thank you.
All right, thanks to everybody. Fortunately, we have run out of time. So much more to talk about. Earlier on, the Minister of Trade and Industry mentioned the very exciting launch of a sovereign wealth fund. Interesting to find out how that money might be channeled into these capital markets. Lots of opportunities to discuss this on CNBC Africa. Do stay tuned. I'd like to thank Mr. Fola Daniel, who's the Commissioner of Insurance, for being here with us today. Sanusi Lamido Sanusi, the Governor of Nigeria's Central Bank. Arunma Oteh, the DG of the Securities and Exchange Commission. Ahmad, who is the DG for the National Pensions Commission of Nigeria. Muller, who's the head of capital markets at the Financial Services Board, and Stella Kilonzo, who is the CEO of the Capital Markets Authority in Kenya. You've been watching a special broadcast coming to you live from Abuja, Nigeria.